If you go and do a Google search on MRF today, the one share of MRF today is more than 1,35,000 rupees. Some time back, it also crossed 1,50,000 rupees. A 10 rupee share is being traded in the market for 1,50,000 rupees. Has it gone up and has it gone down? The answer is it has gone down. So Maruti Suzuki, if I had invested in that particular share today, let's say it's trading at 8,000 rupees per share. So there's a significant growth in this. So that's why I'm saying that stock market investing is not gambling. It is gambling when you come for 1 day or 1 week or 1 month. So when it comes to long term, definitely investing adds humongous value. But in the short term, let's say 1 month, 3 months, 1 year, 2 years, definitely you will incur losses. That volatility is part of the game. Another common question people talk about when it comes to investing is, equity investing is gambling. Is it true or not? The right answer is yes and no. Equity investing and mutual fund investings are gambling if you are coming to invest for 1 minute or 1 hour or 1 day. For example, in mutual funds, you cannot invest every second except for ETFs. So if you have a demat account, you can buy the ETF on spot prices and then you can sell the ETF. But if you're coming for a long term, let's say when I say a long term, let's say for 3 years, 5 years, 10 years and 15 years, definitely you're coming as an investor. So if you ask me whether equity investing is completely gambling, the answer is gambling if you're coming for a short period of time, whether it could be 1 day, 1 hour, 30 minutes or let's say even for a week. But when you come for, let's say, with a long-term focus, I think equity investing as the best asset class which has delivered far superior returns than any other asset class. Can you explain with examples? So let me use something 4 or 5 simple examples through which you can understand that equity investing is not gambling. Equity investing is pure investing and it can add humongous value to you. Let's start with the very first example called State Bank of India. Let's assume that State Bank of India came up with an IPO. Let's assume that they came up with IPO for, let's say, 15 years before. So when SBI came up with an IPO, initial public offer, now let's assume that they came up with a price of, let's say, 700 or 800 rupees. Now what happens is that particular point in time, they had X number of branches. Let us assume that they had 1,500 branches across India. Now only that 1,500 branches was working for you for every 1 share. Why it is called equity is whether you hold 1 share or 1 lakh share or 10,000 shares, you get equal kind of rights when it comes to voting. Now the same for example SBI, which you got about, let's say, 15 years back in an IPO, you had only, let's say, 1,500 branches working for you. Let's assume that today in 2025, the number of branches got doubled. Let's say there are 3,000 SBI branches are there. The same particular SBI share, the number of people working for your profit is not 1,500 branch, it is 3,000 branches. Now, over a period of 15 years, SBI has added humongous value. Now that we are recording this video from Chennai, let's talk about another example called Madras. That time it used to be called as Madras. Let's use another example called MRF. MRF stands for Madras Rubber Factory. I don't know how many people know about it. MRF initially came up with a share price of, let's say, 10 rupees per share. Typically, the face value of the share is 10 rupees. If you go and do a Google search on MRF today, the one share of MRF today is more than 1,35,000 rupees. Some time back, it also crossed 1,50,000 rupees. A 10 rupee share is being traded in the market for 1,50,000 rupees. Has it gone up and has it gone down? The answer is it has gone down. It has gone down, let's say, from 1,25,000, it has gone down to 1,10,000. From 1,10,000, it has gone to 1,40,000. From 1,40,000, it has come down to 1,30,000. So if your holding period is only days, or if your holding period is only months, obviously you are in trader mentality and then you have lost money. But if you're coming up with an investing mentality and then you wait for, let's say, 30 years, 40 years and 50 years, MRF, the share price of a 10 rupee share price has gone up to, let's say, 1,50,000 rupees. Because earlier, let's say I'm talking about 30, 40 years, you didn't see that many number of 2-wheelers or 4-wheelers or 3-wheelers. But today the number of choices, whether it is EV cars or whether it is normal car, you need to have, for a car, you need to have at least 4 tires. Now what happens is they are also selling in OEM, which is called original equipment manufacturer, and they are also having something called the normal retail market, they are also having it. Now what happens is MRF has added humongous value over a period of time. The third example is called TCS, where I used to work from 1992 to 2007. They came up with, let's say, an IPO. Actually, they came up with an IPO in 2004. And let's assume that they gave a price of, let's say, 800 rupees. And let's assume that it's a 2 rupee share. a 2 rupee share being listed at, let's say, 800 rupees, people went and bought. That point in time, let's assume that there are only 75,000 employees. So 75,000 employees were working for me and they were generating profits. But today in 2025, the same company, TCS, is having 6 lakhs employees. Yes, the share price went to 4,500. Now today they are trading at, let's say, 3,300 and all. They have also declared a huge amount of dividend, and the promoter is holding more than 60% in his portfolio. That means Tata Sons is holding. So you know the value of the company. So when I started that investing in 2004, it was only 800 rupees. Even if you talk about 3,200, it has gone up by at least 3 times more. Not only that, every year you make at least a dividend of 70 rupees, 70, 75 rupees, and sometimes they give special dividend as well. Now, this proves a point that yes, TCS share goes up and goes down during short-term volatility. But if you talk about a 10-year period or a 15-year period, the number of employees working for you in TCS has gone up, and that has contributed to a humongous growth in the share price. So there is something called dividend, which is called the regular income that you get. Not only the dividend you get, you also get something called capital appreciation. So far we have seen 3 examples on why stock market investing is not gambling. Stock market investing for over long periods of time will generate humongous wealth for you. Now let's see the 4th example. The 4th example is called Maruti Suzuki. Now when I started working in, let's say, 2000 or 1995, at that point in time we had one car called Maruti 800. Maruti 800 was the single car. But today if you look at Maruti, they have 2 sets of organizations. One is called Nexa, which is an expensive brand, and they have another brand called the normal brand, which is called Arena. Maruti Arena. Now earlier, when I started investing in Maruti Suzuki, they had only one product called Maruti 800. Today they are having about something called at least 15 different products, and for every product they have at least 4 variations. So they are having something called 60 different variations. So they will have something called LXI, they will have something called VXI, they will have something called ZXI and all that stuff. So what happens is that earlier only one product called Maruti 800 was adding value to me. But today, there are about a suite of let's say 60 different products are adding value to me. So Maruti Suzuki, if I had invested in that particular share, today let's say it's trading at 8,000 rupees per share. So there's a significant growth in this. So that's why I'm saying that stock market investing is not gambling. It is gambling when you come for 1 day or 1 week or 1 month. But if you come for 5 years, 10 years and 15 years, stock market investing can add excellent value and exceptional value, provided the governance is really good, provided the promoters are absolutely good, they are not pledging it, provided the kind of products and services that they bring to the market are adding value. Let's end up with one final example called ITC. Now, if you talk about ITC, initially when you talk about ITC, people talk about cigarettes. So initially it was only as kind of a cigarettes kind of a company. That's why they were concentrating on. But over a period of, let's say, 30 years and 40 years, what they have done is they have also ITC have also diversified into other things. For example, if you are in Chennai, there's a great place called ITC Chola. That's a very good hotel chain is there. Not only that, they also have something called ITC Foods Division. If you go to, let's say, near Trichy, there's a place called Virali Malai. So there they are having a lot of products, ITC kind of products, whether it is Atta, Ashirwad Atta, or whether you talk about chips, or whether you talk about other home care products. They have so many other products, Savlon and so many other products. So what has happened is that one company trying to diversify. And another best example is called Wipro. Wipro started their company, let's say, with a lighting company, but they also got into software. When it comes to Tata, they say whether it is salt to software. So they also had Tata Salt and Tata Consumer Products. And today they are also having Tata Technologies. They are also having Tata Elixir, and then they are also having something called Tata Consultancy Services. So when it comes to long term, definitely investing adds humongous value. But in the short term, let's say 1 month, 3 months, 1 year, 2 years, definitely you will incur losses. That volatility is part of the game. If you want to generate good kind of returns, fixed deposit beating returns or inflation beating returns, equity is the only way. And through different vehicles, whether it is small cap, mid cap, large cap, or large and mid cap, you will be able to generate huge amount of value. Thank you. All investments that you're going to make are subject to market risks. So nothing comes without risks. For example, whether you are going to invest in real estate, that will come up with some certain risks. If you are going to invest in gold and silver, the prices are fluctuating like anything every day. That is also coming up with risk. If you are going to invest in direct equities, obviously, yes, it is going to have risks. Same thing with mutual funds. All investments are subject to market risks. Go through all the scheme related documents. Make a decision after going through all the documentation. And whenever you have doubt, you please reach out to us. Get your doubts clarified. Get complete clarity before making any investments.